Hi, welcome to the C.A.TS Crypto Asset Talks podcast of ITCAP. We are here with Miko Otama, co-founder at Trading Strategy AI. We are recording a series on podcasts on Luna and stablecoins more generally. And a few days ago, already 2 weeks ago from the time for the recording, Miko put out a really interesting thread on the history of stablecoins. And I wanted to discuss this thread with him and get a little bit of a feel for what has actually happened in this market up to now. And yeah, obviously the thread, if you want to follow it along, it is going to be in the episode notes. Hi, Miko, great to have you here. And yeah.
Pleasure to be here again. So
in your thread, let's start with new bits.
All right. So we are starting with the prehistory of the stable coins. Actually, the most remarkable thing about Nubits is that it's the first known to the mankind, and it was before Tether. That's asset-backed stable coin. I think Nubits comes from 2014, and it had a good run. Like it was going on for a couple of years before, like most of the Algo stable coins, I think it crashed. It first had a bad episode, but it recovered and finally crashed like in 2017, 2018.
Yeah, you have this amazing chart in your thread where it's like, yeah, it sort of gets along, chucks along at $1, sometimes a bit higher. Then it goes down to what, 80 cents, just immediately recovers. So this might be just an errant trade. But then it actually draws down to 20 cents, recovers, draws down again to 60 cents. But then it just sort of recovers and chucks along nicely. But then in what is it, 2018, mid 2018, suddenly massive trading volume, and it goes down, and it goes down to zero, stick there until 2021, and it goes actually back to 80 cents in beginning of 2021, and it goes back down to zero. Other than that, do you have any more light on what happened there, or is this just sort of, is it a little bit hard to understand from?
Yeah, it's a good question, and I never got answer or researched it very well. What I believe what happened that 2018 was a crypto winter, and a lot of other stuff was dying as well. And then for some reason during the 2020-21, it made a renaissance, and it might be just being because cryptocurrencies never really died. They just stick on exchanges, and you can do a arbitrage to the end of the time, so to say. So maybe because there was crypto summer coming again, bull market, there was arbitrage going on again, and it somehow gave it some more juice, some more fuel to try to climb up again, which it couldn't do.
Maybe Elon Musk tweeted about it or something like this, right? And then it might.
Yeah, that's probably because these coins, they trade on very light volume after they are dead. So even if you have like $1,000 extra cash, you can make the price to be whatever you want.
Okay, yeah, it's true. Sort of the volume there was very light, but you've had a good run if you bought it in what, February 2020, and you sold it mid-January 2021. You had a pretty decent run.
Yeah.
Obviously, if you held it till now, this weird. Anyway, so this was new date. Now, Steam dollars, and maybe before we do Steam dollars, what is Steam actually for people who do not know that, and what is sort of the Steam currency, and then let's go into Steam dollars.
Okay. So this is going to be a funny one. So Steam was Web3 before we had a Web3. It was I think a second blockchain that was architected by Dan Lamier, who also created EOS later. And Steam was basically it was a block service with its own currencies. So you could create your own block, and other people could tip you with Steam token. It was quite similar to Reddit we have today, but it was all
Reddit
everything
with
was
tips,
because
yeah.
yeah, and but because back in the day we didn't have a smart contracts or any of that stuff. Everything was baked into the blockchain, like storing the content, the stable coin, different user permissions. Everything was just a piece of a single chain, including their stable coin.
Okay, so they had a stable coin, and how did this work?
That's a good question.
Okay, so
it was an Algo stable coin, and I think they had like 10% of the Steam, same as Luna nowadays, or was that they had a part of the Steam token allocated for the stable coin to keep it stable. And of course, because in the end, the Steam token itself that was backing the stable coin as an equity went to the zero, the stable coin died with it.
Okay, even though you have actually the chart, and the chart, I mean, the chart that you posted is without volume. But the interesting thing is that actually most of the time it seemed to be trading below $1, no? But then there are these periods where it goes up to $14, then goes down again, goes up again. And then since what does it mean? The last year and a half, it's actually trading at $6, $8. Even now, the last price that you have is $4, right? So it's very interesting.
But because this chart doesn't have a liquidity or volume, it's very misleading, because the liquidity there is like probably like 5,000 USD. So okay. You can't redeem or do anything with it with winning money. If you have a $1, maybe 10, but that's all you can do.
Okay, so that's also an important point, that there's two ways stable coins can die. So one, they can go, the value can go to zero. But the other way they can die is also simply the volume goes to zero. And this obviously goes for every stable coin. That's kind of and that's what I always find interesting in the Tether discussion, where people say, oh, but Tether is going to die because people redeemed 7 billion or what it is. It's like, yeah, but look, maybe this is what is happening. Maybe Tether is dying and everyone is going to redeem. But if everyone redeems at about $1, then, well, that's fair enough. This is not great for Tether if it goes to zero, but it's not a catastrophe. Everyone just got their dollars out, right? So it's a different way of dying. It's just, look, someone else took it over, but people didn't really lose money in this case. They just withdrew their money. Now, obviously here it is not clear what happens, because most of the time it was actually trading below what looks to be $1, but yeah, so interesting. So that's Steam. And then you had two more, Basis and empty set dollar.
Yeah. So Basis Gas was a clone of Basis or Basic Gas. Was it Basic? It was actually a US company, and it never really happened because regulators shut it down even before it happens. I think they raised like 150 million in a seed funding, but never got the project out. And I guess then the founder went and created some other crypto startups. But what is Basis Gas was a clone of Basic, so I think they took the code. And what makes this project fun or remarkable? Well, if it failed, but there's a rumor that Doc One was one of the co-founders of Basis Gas before he went and created Luna.
Oh, okay, but that's just a rumor, so we don't know.
We don't have facts.
Okay, and the interesting with Basis is that really it just peaked so it like almost went up at least 50%, right? But then it just sort of crashed down, and that really just got stuck at zero. Whilst empty set dollar was taking a little bit more time, but ultimately it got there as well. But again, also trading all the way up to $1.60, which is again interesting that these algo coins kind of go either way. So it's interesting why people would buy. That's actually an interesting psychology. Why do people buy an algo coin that is meant to be at $1? Why do they buy it at 160? Any insights on this? Why anyone would do that?
I don't think it's people. I think it's well I work for an algo trading company, so I think it's robots and other algo traders, and it's usually because of arbitration. So there's because these tokens, they never die, they stay on exchanges, they stay on balance sheets, they stay on order books. So as long as there's some kind of wacky 3-way, 4-way trade you can do, an extract like let's small value, it makes sense to do the trade, and it will up at the end of the trade, it leaves value to the something that's not $1.
Okay, but it's still interesting. I mean, I still fail to imagine a trade where you could buy empty set dollar at 160 and make money, other than saying, oh, it came from 120, it's now 160. This is a massive momentum trade. I'm sure it goes to $2. But then, I mean, yeah, the guy who bought at 120 and sold at 140 made money, or at 160 made money, but the guy who bought at 160, well, it crashed, right?
Yeah.
But yeah, there might be momentum bots around that also did just see. Or are there arbitrages? Well, I don't know. I can't imagine any arbitrage where I could buy an empty set at 160 and effectively
because usually the empty set is not the thing. The problem or the opportunity for traders in the crypto markets is that you have a lot of trading pairs that have a different base and a quad token. So you have something that's trading against dollar, you have something that's trading against ETH, and then you have a empty set dollar that's trading against both ETH and Bitcoin and so on. And when you have a 3-way arbitrage and somewhere there's a pocket of liquidity you can use, that's how you make the trade.
Okay, so there's someone who is, okay, interesting. And then we have, at the last one, Iron Finance. This was a bit more recent, right? But this was also big.
Yeah, it was a very big because it was hyped by Mark Cuban, who is a famous US investor. And yeah, in the case of the Iron Finance, the Titan, what you have is a two-way structure. So they had it backed by real dollars. I think it was USDC, up to 60% or 70%. So like 2/3 was like backed by a dollar, and the remaining 1/3 was driven by an Algo, and it got really big. So it started as a very small, unknown kind of a Ponzi project, but suddenly it got super popular. It grew to a size of 2 billion USD as a total value locked. But then in the end, it crashed because of debt spiral and bank run happened. People who got rich suddenly started to sell, and they were selling too fast, and then it just went down very fast. It went up very fast and it went down very fast.
But so again, this was when you say it was 60% backed, people got kind of 60% back. Now, possibly the ones who got out first got 100% back, and the one who got out last got 0% back. But in average,
yeah. So yeah, you had two tokens. You had the stable one, and then you had the equity token. If you hold the equity token, Titan, if I recall the ordering correctly, it went to 0. But if you were the stable coin holder, you get the 60 USDC for every 100 stable Iron Finance dollar you had. But did they implement like a proper gating that you really recovered 60 cents in the dollar?
Yeah.
Stable coin? It was like a really like a pure algo coin in a sense that it was a smart contract that was doing all the calculations, and there was like no human intervention on that part.
But so what you would expect, right, is the first people who redeem their stable coin, that they still redeem at 100 because they get like because there's a USDC reserve and they just get the USDC. And then they run out of USDC and then you get nothing. Or did they already say it's like, look, we're in panic mode, so now you get 60 USDC and the remainder we get you the in Titan coins. So
I don't actually, that's a very good question. I don't remember details, because if this is my guess, but the redemption was 2/3 of USDC and 1/3 of Titan equity that you would have to sell, which would be worth 0 at that point.
Okay, but at least so the beauty there is that in theory you don't need to have a bank run dynamics, because you kind of know that you get your at least your stable coin, you're gonna get whatever you get, 60 cents in the dollar. The only difference is, well, you get your Titan a little bit earlier. But if you're happy to hold the Titan because you think it's almost 0 now anyway, you might as well wait a little bit. Whilst obviously, if first come get 100 cent of USDC, then everyone is storming to the door. And Iron Finance, is this an ETH? Was this on the ETH chain or was it on the?
This was on Polygon, because this was the first project that caused the Polygon network to really work hard. It actually, Polygon never crashed, but it got like gas, because when the death spiral on Titan happened and people were trying to get out, the gas fees went up massively, because there was a very big rush to the exit door.
Okay, so even on Polygon, which tends to be a little bit more forgiving, right, in terms of transaction volume, even their gas cost went berserk. Can't even imagine what would have happened on Ethereum, right? If it would have been on main chain. Yeah. So, and obviously, when you've written the thread, Terra was still pretty much shaken but alive, which now is not necessarily the case anymore. So, but there's still one algo chain standing, right? Which is this one?
Frax is the one of the big. Well, there are multiple new Algo stable coins, and there are new ones coming every day, like on Near and Tron blockchain. But the Frax has been around for a while, and yeah, they have the same structure as Iron Finance and Luna.
Okay, but the difference being, and this being an important difference, that at least at the moment their collateralization ratios are very high, right?
Yeah. So what was in the case of the Iron Finance, it was 60%. In the case of the Luna, it was less than 10. And I'm actually now reading the Frax website, and it says collateral ratio is 89.2%.
Okay, so almost 90%, which is obviously, this is pretty nice. I think the idea in Frax was, okay, let's build the ecosystem, let's grow the coin, let people get comfortable with this, and when we can do so safely, let's reduce the collateral ratio over time, right? That's kind of the idea with Frax, and I suppose they haven't felt that they can go more than 90. And with 90, it's the beauty is, you could say it's like, look, you can always, on the one hand, you can say there's a floor. You can say, look, you recover at least 90 cents in the dollar, but it also means you can't short it, right? Because what happens when you short it? Oh.
Yep.
So if you short it at whatever, if you try to short, certainly if you short it at 80 cents, they can definitely redeem it. But even if you're trying to short it at 95 cents, Frax might come in like a central bank and say, it's like, look, I'm spending a bidding of collateral, I'm buying Frax against it. And if it goes back to $1, you're losing your 5 points on the way up, right? So that's the way how at the moment Frax still has a certain firepower to defend it. doesn't mean that they can't collapse, but even if they collapse at the moment, the collapse would only be 10%, which in crypto terms is nothing.
And it, not even in the crypto terms, because euro has fell against US dollar, like for the last 8 months, it has lost around 20% value, which is
okay,
more
so
than
you're really into the, okay, what's the what's the normal loss for a forex and just for a forex
exactly
mismatch? So effectively Frax at the moment is still mostly a collateralized stable coin according to our taxonomy for here, right? Frax is closer to USDC than it at the moment is closer to USDC than it is towards Luna or Titan at the moment. Now, obviously, the plan is to change that, but at the moment, it's still closer.
Correct.
Mikko, thank you very much. This was an interesting discussion about the partial history of stablecoins, or rather, the partial history of Algo stablecoins. And yeah, we have seen that quite a few of them didn't really make it. On the other hand, it's a sector that is still, as a sector, thriving. And you said there are actually new stable coins that are being created at the moment, right?
Yeah, and and it's funny because what is being created is more or less the same, and the people are now just like changing the risk parameters and trying to find like in the case of Frax, what's safe. And of course, if you take more risks, you can expand the ecosystem faster. You can burn your reserves for marketing or whatever. But if you have a cash flow and if you can make it sustainable in some point, then you have kind of a machine that prints money, or stable coins in this case.
Yeah, as we're discussing in another episode, right? Otherwise, you need this ecosystem value for an algo coin. So if the ecosystem has value, if you can earn transfer fees, if you can somehow charge the project that are operating on your system, then you're kind of okay. But you do need this ecosystem value somehow.
Yeah, correct.
Mikko, thanks a lot.
Thank you so much.